Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 30th of October. I'm Daniel Lam, your host for the podcast. The FOMC in early Asian hours today was a tug of war between dovish and hawkish news. Dovish because the Fed did deliver another 25 basis point rate cut and announced QT will be ending at the start of December. That's moderate easing. However, it did not commit to a December rate cut. Despite slowing growth and employment data alongside contained inflation pressures, Chair Powell pushed back on market expectations for a December cut, emphasizing that it was far from a foregone conclusion. Now, Powell cited mixed official data prior to the government shutdown and private data since as explanations for the differing views. Claims are stable and job openings are stable, but there are worries about layoff announcements and the difficulty of finding jobs. Now, for inflation hawks, progress on inflation, even excluding tariffs, is limited. It seems that divisions within the FOMC are unlikely to be resolved, even if government data becomes available. Now, money markets have been pricing in a more than 90% probability of a further cut in December, and that probability has retraced to under 70%. The US dollar rallied from intraday bottom to up nearly 1% before retracing somewhat at the time of the production of this podcast. S&P 500 was down by almost 75 basis points before recovering to nearly flat for the day. Now, in our view, a gradually cooling economy and stable inflation expectations still point towards further easing over time. But this lack of availability in data makes the Fed decision extra difficult. The reason why equities were bought into weakness intraday can be attributed to the meeting later today between Presidents Trump and Xi. The risk now is a buy the rumor, sell the fact price action, especially with this uncertain tone from Powell at the FOMC. Nonetheless, we would take possible pullback as a buying opportunity, as we discussed in our podcast earlier this week. AI-related stocks in the US are quite well supported by solid earnings and guidance. Gold miners are also interesting, given the recent pullback in gold, plus the strong free cash flow and attractive profit margins in these stocks. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.